Welcome to Trading Lounge and the US indices, and I hope the US folks are enjoying their holiday, their break. I have to say though, the Chinese certainly beat the Americans on holidays. The Chinese have lots of holidays. Very sensible. I think we sort of probably in the West work a little bit too hard, especially as you get older. The time seems to go quicker, and the list of tasks seems to grow as well. Rightio. Well, we've just been using the SPY really for a bit of a nice clean sort of backdrop sort of picture, and we've been looking for wave 4 here. So we'll be looking for wave 5, then wave 4, then wave 5. This wave 5 could be sort of, the blue wave 5 could be roughly the length of wave 5, but as always it's better to count the actual structure at that point. I won't look at the bearish count today. We did that last time, but we're aware of where that is, and we will be working on that as well. So that's the SPY. So going over to the S&P, we'll pick it up going up into this third wave here for that. So we're in this third wave here for the S&P. So 1 and 2, 1 and 2, 1 and 2, and up for the third wave, and the fourth and fifth, and so on up here. So that's sort of where we are here with the S&P. We're going to pick this up on, this is a daily chart here. We're going to pick this up on the 100 ticks. So it's a long way in on the intraday. So we're just in this little area here. So this will be a green wave 3, green wave 4, going up for a green wave 5 for that wave 3 there. So we've got green wave 3, green wave 4 that we've been working through, and yeah, so let me get my bearings here. So we've been counting up off the low here, 1, 2, 3, 4, 5. Because we've got an impulse wave here, we knew we could start loading up and to catch that third wave, which has been nice. So we could bring the stop up on that too. Just give me a second. We were going to take money off the table at the 5 here. I think we could probably stretch it a bit higher, but we certainly want to be taking something at that number there, because it will tie you up in time more so than anything else, and we'll also put in group 1 above the 500 here, which is just 1, 2, 3. Yeah, but that becomes the initial swing range for, we need to put in group 2 as well. So we don't need this group 2 down here anymore. So 72 and 65 there roughly. You can fix that up. So that's where we are there. So we've still got, on the intraday basis here, we still got wave 5 and then 4 here, and then up for 5 and then 4 and then 5 here. So it's pretty much a what you see here is not what you get next. Okay, so as I mentioned, we always get the opposite of what we're looking at. We don't need that. We can bring the stop up there, get all those, well, just get this one to break even here. And you know, when we talk about the stops here, what I'm really talking about, especially within group 1 of the 400 here, 1, 2, 3. So we would want to see the first spike down here, and then you'd put your stop under that. Okay, so it's not a particular price point at this point in time. We have to wait for that spike to come down. You know, it's a bit like these here. If that was, you know, we wanted to put a stop here somewhere, we have to wait for that low to come in and then put it there, and so on. So anyway, you know how that works. I won't bore you to death on your holidays. I may or may not do a video tomorrow for the stocks or for the indices. It's Monday morning here in Sydney, Australia, Blue Mountains. But I'll just see how the markets move, you know, what goes on. I mean, the futures market will be sort of bopping along. So, but anyway, you don't need to do much if you're long. Just enjoy your holidays. Set an order to take some money off the table at 500. And we'll try to get a little bit more out of it. We'll probably be in the 420 area. So, but anywhere between 10, 20 and 30 would be fine to take that off the table. And then we'll talk about this wave 4 that will come back, and will probably break outside of this initial group 2, group 1 and 2 here for that. So that's where we are. Then we're going to push up here. So, I don't think we'll trade against the trend here unless I see something that's really good. I mean, this wave 4 can pull back to this wave 4 here, or let's just use this clean table here. So this low of wave 2 to wave 3 here. So the 38.2% is a little bit above the previous wave 4 here. So what I normally do is I'll take the previous wave 4 and the 38.2% retracement level, and then that will be our first sort of, we'll kind of expect that, but will we come back that far? Probably not. Let's just have a look at the previous wave 4 here for a moment. That came back to the 38.2%. It's really got a bit more to do with the actual price point that it's sort of heading to. So we would always look for 3 to be tested in that case. Yeah, but it could be shallow. It could be 23.6. So where does that leave us? Yeah, it leaves us into this support here. So 436 area probably. 436 area, 436. Okay, anyway, we'll get there. We'll just see where some of the consolidations are for all that. But anyway, we're on track. Everything's going according to plan. And this is the Nasdaq here. This counts a little bit different in this instance. I should put wave 3 here for this, but wave 4 is probably going to overlap wave 1, so it's probably not the case. But I can't rule it out. But otherwise 1, 2, 3, 4 here, and then going up for 5 here, and then a pullback in here, and then pushing up here higher. So yeah, I think that we're still up here. We should see a strong move in here. So that should be kind of interesting, really. This is what stocks are telling me. A lot of stocks. I just did the stocks video, and this is what it's telling me here. So we'll probably climb a little bit higher in all of this here. We'll see. But no need to move out of the market. We need to clear this high here, whatever happens. That's for the Nasdaq. And we'll have a look at the Dow Jones. We haven't seen that for a while. So it's hard to get a bearish picture out of this, because even if you looked at this, there's just not 5 waves down here. It's just not as corrective. So but we could go into a larger corrective pattern. So we could put an A and a B here and a C wave over here somewhere. But even then, if this is 5 waves to here, then we're just going to be over the top here, which is okay for a B wave, an A, B, C for a big B wave, and then come down for an expanded flat correction. It's possible. But at this stage, it's just not looking like that. So we've had this particular count here for a long time. So I'm just going to leave it. Yeah, so we've got little 5 waves here. So we're waiting for the pullback in here. I won't go into it. We're looking at the 100 ticks or 1,000 or something, and we've been waiting for that pullback there. So that's in there now. So we'll probably see a move just above the high here, and then a correction like this one, taking this high out here and coming back. So that's what they normally do, something like that, and then pushing up. It kind of needs to be, if you're looking at this here, you can see that it's got a bit of a glass ceiling here. So it needs to find it a support. So it's not really ready to race off yet. Like what it needs to do is it needs to come back and check it and then make new highs, because it really hasn't taken out any of these. It's taken out that high and corrected. So it's getting there, but it's not free yet, It's a bit like blacks and women that got the right to vote, but they don't really have the same quality yet. Do you know what I mean? So it's a bit the same here. So it hasn't got sort of true freedom. I mean, none of us have got freedom. We're all sort of slaves to debt. Money is debt. So the Russell here. So yeah, I still want to have a look at the bearish side for this, and this would be it here, even though I'm looking at it going further up here. But if we looked at it here as an A, because I'm kind of thinking of the banks as well. So with this, an A wave here, and then an A, B, C for the B wave here, and then 5 waves up here of 1 and 2 and 3 and 4 and 5 up here for this, 1, 2, 3, 4, 5. If we go past the 5 waves, sure, we can turn bullish at that point. But the problem is that I've got the banks, like the Bank of America here, for example, it has made a new low down here, but it hasn't given us 5 waves down here. It's just given us 1, 2, 3 here, and we're looking for an A and a B and a C wave here, and then making a new low here, and then moving up at that point. It can go down from this one as 1 and 2, but I don't think that's there. So, and Goldman's are the same as well. Morgan's are a little bit different. So yeah, this move down here still needs to come. It's just not finished here, unless I can kind of look at this in some other way at this top here. Any ideas, send them through. So yeah, it's possible that we could just get one more spike down here and then complete it at that point. That's what we're not sort of we're not home and hose on this. But yeah, we've been looking at this little move up here that's on the ETF, of course. So this is on the Russell here. So we got down here and we started counting it to the upside and didn't call any trades in here, but the idea was to get to the 1900 and get out. Now we need to take this high out here. So there's going to be more, and then I may have had this count a bit short here, and there might be another bit here, but I wouldn't sort of expect too much out of it. It's not going to go too far. We've got group 1 here, so it might pop its head up above that, 30 and then 50, probably prove me wrong and just start to take off, but I think everything's been accounted for at this particular point. I mean, I could count this differently, but I'll just stay with it at this point like this. So the idea was to get here and take money off the table. So probably done that already, so but can move higher. And then we come over to the European markets, and we're looking at the DAX here, so slightly different pattern with everything. So we're looking for, I don't really know what we're actually looking for here in terms of the bigger picture. I'm thinking this is the A wave, the B wave, and the C wave, as you know, and we need to count this up here. Now, yeah, I mean, it should just, technically, it doesn't need to make a high above here, but it does need to make a high above here. How far it goes up here, I think we'll just line it up with the S&P and the rest of them. There's different ways to count this up here. I've just got it as 1 and 2, 1 and 2 here, and a third, fourth, fifth. Though it's at the 61.8% at the moment, so you have to expect it to sort of play around here for a little while before sort of trying to edge higher. But it'll be something like that. We can definitely move the stop up here to break even, and it's just going to be a bit of a hard slog around here. I won't add to it just yet. I think we've done all the right things at the right time, so we'll look to take that further up there. But I'll get a bit of an idea on this count first, because yeah, it could be counted 1, 2, 3, 4 here. It looks like a nice 4th wave, but it doesn't look like a nice 5th wave. It looks like a 3rd wave here, so it looks a bit more like that. third, fourth, and fifth here for the third. Maybe third normally comes in around the top there, so we get a bit more length out of that probably. 3, 4. Might be able to get a bit more out of it, but we'll just start off. That's the conservative count, you know. Okay, so nothing to do here. Just hang in there. So you know, with this particular market here, if it is moving up in line with, it's got the same count as the DAX here, basically. So it's got the same things here. So if we kind of just come back to, where's our SPY actually, that will be a better picture. If we think of the SPY here just for a moment, that it's, you know, and the S&P and the Nasdaq, you say we've got 1, 2, 3, 4, 5, we're coming up here for this one here, and then we're going to have a wave 4 here, and then we're going to push up higher here. Well, then the FTSE and the DAX can do kind of the same then, can't they, you know? So that means that when this hits this top of this third wave, we're going to spend, how many days was this? 1, 2, 3, 4, 5, 6 days. So this one should be bigger than this one, right? So wave 2 was simple, wave 4 was complex. So if that's 6 days, this could be 2 weeks, 10 trading days, you know? So then we think about, okay, well, the markets are going to be bearish for like 10 days. That's a pretty big sort of call, isn't it? So that means that this market will come up here, somewhere up here, in the meantime, and then spend 10 days kind of correcting here. Now, will it make a new low? Will it give us some sort of larger ABC pattern here that we could call 1 and 2 at that point? Is that possible? Is that what we're looking at here? So I don't know if we're going to, you know, make a new low down here yet. The FTSE 250 tells me that this is a wave 4 here, and that we need to come down and make one more low. So we'll have a look at that in due course. But you know, we're on 5,000 ticks here at the moment. So yeah, but and we could be in some sort of triangle pattern here as well with all of this. If we just go back to a daily chart for a moment, a little bigger picture. In fact, we'll go back to a weekly chart. Let's just go back and have a look at this dilemma really, because it's getting a bit more data here. So the dilemma here for me is that we can look at this as 5 waves up here. We've got 1 and 2 here, maybe even on the monthly. Sorry about this, but I think I do need a bit of help with this one, I think. So we could look at this is kind of interesting because with the SP500 it took the low out here, right? But with the Nasdaq it didn't. So with the S&P we have to look at this as an ABC pattern. With the Nasdaq we can look at it as 1 and 2 here. So it's like, well, how do we look at this here? Do we look at this the same thing? I mean, it does count quite nicely as an A and a B and a C here. So this could also be a 1 and 2 here as well. Now, I know that's pretty hard to fathom in the current situation that we're in at the moment with, you know, all sorts of things, you know, the UK leaving Brexit's one thing, and, you know, money printing and all those sorts of things, and you know, but that's the thing I've learned, you know, when it's all bad news, it's sort of, well, one of the bankers said it once, which is not a very nice saying, is sort of buy when there's blood on the street. I mean, it's a horrible saying really, but it's kind of true really. So when you're in the thick of the worse the news is, the more that the buy is really. But the thing is over here, we've got 5 waves up here. So do we, should we be getting a more of a pullback in this case? But the rest of the market's bullish, so it's kind of like it's sort of like this here is the possibility of being 1 and 2 to here, and then 3, 4, 5. That type of thing. So if we have a look at this on 20k, this little area in here, and just keep building a case. But if we're going to spend 2 weeks on the downside very shortly, it's going to put a lot of pressure under all of this. And so, I mean, it doesn't really count very nicely as a 5-wave structure here. I could put it here and look at this as an A and a B and a C, but I don't think that's okay. So I'm going to put that there as 1 and 2 and 1 and 2. I could put this as wave 3, but it's a little bit sort of short, but it's got nice sort of bones about it. So we'll probably need to look at this as 1 and 2 here, which kind of gives it a fair bit of upside potential at this point. We could also look at this as an ABC for the A wave here, a B wave here, and a C wave moving further up here with 1, 2, 3, 4, 5, bringing us into this 50-60% here. So the thing is, in a nutshell, is that we will be moving higher. It's just that I'm unsure of the bigger picture with this. This is just the 100 ticks here that I'm just working through, so I'll just go through this a little bit. So yeah, I don't know the bigger picture, but we can look at this as 1 and 2 and 1 and 2 here. That's the best count. And then 1 and 2 and 3 and 4 here, and going up for 5 here. So there will be, for the intraday traders, there will be, it looks like it's still shy of making another little move up here. That's a little bit weird, that move there. It looks like a little third, fourth, but it's not going to, can't be the case. So we should get another little move up here. We should make a high here, and then you're going to see an ABC pattern across here, correcting this here, that probably just come back, because we're in a bullish, there's plenty of momentum, we'll probably just come back into the 75-30 sort of area and then push up from that point. So if you wanted to build into that, well, then you can. That would be the nice optimal place, or even better still, down here on this would be good as well. But yeah, so there's still more to climb here for this one. So then we come to the Australian market. So the Australian market, from this move down here, right, and all of this is, from here to here, is very much like the English market, the FTSE, except our market had this push up here and then this drop here for this, giving us a corrective pattern in here, making all of this corrective. That's why, coming back to the FTSE here, if we can come back to the 20k here for a moment, or daily chart or something or other, this this move here, looking at this as a corrective move here, would put it in line, I know it's a bit weird, put it in line with all of this here, with the Australian market, because they've got the same patterns here. So anyway, the Australian market here, we've been looking at it in sort of 3 different ways, really. We've been looking at it with this particular triangle pattern coming across here, and this is something that the banks have been delivering for quite some time, and we know that this market works on that. So this would be the A, the B, and A, B, C, D, and E here for this. So that's possible. I guess the real takeaway with everything here is that one thing that you can't forget is that all of this in its own way is corrective. It's a corrective pattern, and it's traveling sideways, and the trick is to work out when it's finished. Now, so we're not in a bear market. We're not in some sort of, massive bear market situation. That's the bottom line of all of this. So, which is important for, portfolio holders that are, going for the dividends and earnings and growth and all those sorts of things. So that's good. That's good to hear. So this particular triangle pattern would see the market have 5 waves up here and then come down for this C wave here, which is kind of, the reason I like this for is because it's kind of in line with the US banks doing 5 waves up and then down, because our market follows the banks. And the US banks and the Australian banks, and each bank is doing its own thing, but in a way that many of them sort of group together. So we can't eliminate this possibility. Okay, in the short term we're going up, the momentum's up with the US stock market and so on, so we'll move up. So we can look at this here as an A and a B and a C wave. I feel good about that. Can we look at this as a bullish market? A bit like, reminds me of the Dow Jones actually, if we look at it like 20k is our bullish count, isn't it? So this would be our bullish count here. Looking, and I kind of like this count a lot actually. Let's just get a bit more data in here. So we've got the tops over here. We can look at this as an A, B, C, D, and E here. You could probably W, X, Y that, but a bit more of an ABC man. So yeah, we can look at it as wave 1 and 2 and 1 and 2 here. Now everything's okay. What I don't like about this is wave 2 here is actually really quite big compared to wave 1 here. So that's a bit of an issue for me. But I can't wipe it out. So that's a possibility as well. So let's just imagine that we get 5 waves up here, all right? And it just takes out the top as they normally do, and then it corrects at that point. If it corrects, and we've got 3 waves here, I mean, it still could be down for 1, back for 2, and come down here for 3, 4, and 5 to do that, finish that other pattern that we've got. But in the meantime, if it took out this top here, then we'd be bullish at that point with 1 and 2 at that point. So we would come over, as wave 1 here for that, and we could bring in wave 2 here and that type of thing. So I won't know this. We just have to work through it. We put all the counts on the table and then we'll just eliminate them one by one. And in the meantime, we just got to talk about them, So this would be a little bit like, I'm going to bring up CBA here for a moment. I mean, CBA is completely different to the other markets in a way. So CBA here, if it was going to follow, let's just bring the Bank of America back here. If it was going to give us 5 waves up here and then have that move down here, then this would be the same here. It would have this here as, 1 and 2, 3, 4, 5 up here. So not today. You could go long today if you wanted to on this. Let's just go in and have a little look at this. So it's a bit rough and ready. 1, 2, 3, 4, 5 here. So 1, 2, it'll be in there. So we've got, could go 1, 2, 3, 4, 5, 1 and 2. Yeah, there's 2 ways to look. Both ways are bullish. So if you want to go long, you can go long here. Just go long and keep the stop under here. Okay. Not the hourly chart, the daily chart. So what we'll do is we'll just bring this down to here and we'll pretend we're going long here at the moment. And yeah, because in one way or another, it doesn't really matter. We've either got 5 waves up or any new high here would sort of suffice at this point as well. Rightio. So now for the Australians, this is the XSJ here. So this is the consumer sector here. I think there's some opportunities here to hold long for a while in these. So this is the actual sector here. Now what I wanted to point out is that we've got this first leg here, which is corrective. So it's probably an A and a B and a C wave here. And then we've got 5 waves to the upside here and then a pullback and and this here, and then we'll be going up here. So what I was going to say is that if you're looking for some longer term holds, then look at the stocks in this particular sector. And when you start to see patterns, Woolworths is one of them. Here, this, you see how it's got the same pattern here. It's got this C wave coming down here, the A, the B, and the C here. So we could look at that a bit differently, actually. And then you've got this pushing up here. You're at 40 here for this. So a little classic trading levels pattern here. So these are a sort of long-term holds, okay? But because this is corrective, we'll be taking out these tops here. If I had our portfolio new site ready, we would have these in as longer-term trades. Coles is another one here. It's a slightly different pattern. Now, not all the stocks in the sector will be the same. Obviously, Woolworths is probably the biggest one in there with Coles, and so there will be companies that are quite small or have the same pattern, and some will be completely different. But in its own way, this is all the corrective pattern here. So Coles is strong as well. We've got that 5 waves here. So this is going to push higher. So these are nice long-term holds. GNC's in this sector too, I think. So this is coming off the low here. This looks a little bit sort of bearish, but it's probably the A, the B, and the C wave here with this happening here. So if you get support on $8 here, then you can go with that, you know. Yeah, so once you get that support on the $8 here for this, okay. Anyway, just have a look at this sector, and anything that's got like this, these will be long-term holds. I just wanted to throw that in. Alrighty, thanks for tuning in. Cheers.